Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 5th, 2025, and we're diving into Sterling Infrastructure's latest earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Sterling Infrastructure has just released their second quarter 2025 results, and there's a lot to unpack, from record revenues to increased guidance for the full year.
Revenue and profitability overview. Let's start with the top line. Sterling reported revenues of $640.5 million for Q2 2025, marking a 21% increase from the previous year. John, what are the key drivers behind this growth?
Absolutely. The revenue growth was primarily driven by a 29% increase in e-infrastructure solutions and a 24% rise in transportation solutions. This more than offset the slight decline in building solutions. Additionally, the gross margin expanded to 23.3%, up from 19.3% last year, thanks to a strategic shift towards higher margin service offerings.
And how did this impact their profitability?
Sterling achieved a net income of $71 million, or $2.31 per diluted share, which is a 38% increase. The adjusted EPS came in at $2.69, significantly beating the analyst forecast of $2.13. This reflects strong operational efficiencies and cost management.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. Sterling reported an EBITDA of $116.2 million, a 34% increase. What does this tell us about their operational performance?
The increase in EBITDA, along with an adjusted EBITDA of $125.6 million, indicates that Sterling is not only growing its top line but also improving its operational efficiency. Their focus on high-margin projects, particularly in e-infrastructure, is paying off. The backlog of $2.01 billion and a book-to-burn ratio of 1.4x provides strong visibility into future revenue streams.
What are Sterling's expectations for the rest of the year?
Sterling has raised its full-year guidance, expecting revenue between $2.10 billion and $2.15 billion, and adjusted EPS between $9.21 and $9.47. This reflects their confidence in continued growth and margin expansion.
Strategic initiatives and market position. John, Sterling recently announced an acquisition. Can you tell us more about this strategic move?
Yes, Sterling is acquiring CEC Facilities Group, which specializes in electrical services for high-growth markets like semiconductors and data centers. This acquisition is expected to enhance Sterling's capabilities and accelerate their geographic expansion, particularly in Texas.
How does this align with their current market position?
The acquisition complements Sterling's strong performance in e-infrastructure, which saw a 29% revenue growth. It also supports their strategy to focus on high-margin, mission-critical projects. While Building Solutions faced a slight decline, the overall portfolio is well-positioned for future growth.
CEO insights and strategic vision. Let's hear from Sterling's leadership. What insights did CEO Joe Cutillo share about the company's performance and strategic vision?
Joe Cutillo highlighted the company's strong revenue growth of 21% and an impressive 41% increase in adjusted EPS. He emphasized the shift towards higher-margin service offerings and the robust pipeline of future phase work, which is approaching $2 billion. This strategic focus is expected to drive continued growth and profitability.
What are the key takeaways from his remarks?
Cutillo's remarks underscore Sterling's commitment to leveraging their strengths in e-infrastructure and transportation solutions while navigating challenges in the building solutions segment. The company's strategic initiatives, including the CEC acquisition, are aligned with their long-term growth objectives.
Key takeaways. As we wrap up, Sterling Infrastructure has delivered a strong performance in Q2 2025 with record revenues and earnings. John, any final thoughts on their investment prospects?
Sterling's robust financial performance, strategic acquisitions, and increased guidance make it an attractive investment. Their focus on high-margin projects and operational efficiencies positions them well for future growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Sterling's performance in the comments below.